Whoa, this SUI trade was something else. Let's build context first. This was just amazing. Asia can be a blessing and a curse because I missed the trade, but I hope a lot of you guys took it because this was such a clean setup. Oh, and I missed it. So we go over it. We build context first. We are in this range from high to low, and we are watching the volume profile in this range. What could we reject from? Where are we? And you can see we are between the POC and the volume area high. And what do we have here? Because we deviated the POC and we grabbed this liquidity point. And why is this liquidity point? Because, as I always say, it's your first move up before going down. So this is your liquidity point gonna be. Is there supply creation above the liquidity point? Not really. So you have this supply. This is your 8-hour supply, which is good looking supply, which we didn't come into. And you have the 12-hour. You don't have anything real good looking. So if you wanna draw this as a higher time frame supply, you can always draw this. And this is a bit less good looking, but this is where we came in and where we rejected from. So this is the most clean looking supply. We grabbed the liquidity right there. Yeah, so we could expect a rejection because we deviated the POC as well. So what do we have here? On USDT, we formed a very good bottom here. So we had our 1, we had our 2, and we had our 3. So this confirmed at 9:15, and let's go to SUI because this is good to know as a confluence. This was at 9. Your entry here was at 9, and I'm gonna explain why that is incredibly important in a minute. So let's go back in time and let's trade it like a real trade, like we always do. Delete that shit. And what do we see here, guys? Please, if you see this, send it to me, call me, wake me up. I don't care. Clean as fuck. What do we do? In Wyckoff, you very often have your first move up, move down, and then you have your range creation, right? You have your 1, you have your 2, you have your 3, and then go lower. This is also in Wyckoff. This is called a certain term in Wyckoff, which you can study if you want. That every move has a certain name. So that's really important to know, because this move is this move. So where are you gonna draw your range from? Of course, from high to low, because you're in an uptrend. And then you're going to draw your range like this, from high to low, because you're in an uptrend. What do we see here? A deviation of the range. You see, you took liquidity from point 1. It doesn't matter if deviation is like this or a deviation is like this. It's the same. You take liquidity anyway. So what do we do here? We can connect the dots and we can look for our tab 3 POI for a model 2 or a model 1. And you don't really have a POI here for your model 2. The only thing you have here is when you go on the 30-second, because it's a low time frame model, is that this is gonna be your extreme liquidity, and that this move up is gonna be your supply, which you came into. Could you use that? Yes. But was there a break of structure here? No, because structure was going like this. There wasn't a break. Your break would have been right there, but you never broke, and you're not gonna enter when price is below the EQ of the range. So when I play it, you can see where we're going higher and never breaking this structure. So there never was an entry right here. There never was an entry. So let's delete that and let's watch now for a model 1. And even when you see price looking good like this, you can remove the EQ, what I do a lot, and then draw your range like this, because maybe you will get a Wyckoff inside of a Wyckoff. Maybe not, doesn't matter, but it's nice to have your internal range like this as well. Because when price is going lower right here and go higher and takes out this range low, range high, deviates your tab 2, that means you have a Wyckoff, boom, inside of a Wyckoff. So you have your tab 1, tab 2, tab 3, and you have your tab 1, tab 2, tab 3. So that's a double nice. Okay, what do we see as well is that we have those lows right here. And you have all these lows, which are gonna be liquidity for the market makers to grab. And that's why I say, please wake me up next time when you see the setup, because even the details matter. Like every low that's not taken, look at this. Every low is higher than the other one. This one is higher than that one. This one is higher than that one. The details matter. Look at those details. This one is higher than that one, which means stop loss here. People have stop loss here. People have stop. You see what I mean? This one is higher than this one, so it's all higher. That's what you want to see. So we are in a POI to short. USDT is making this insane low, which you have your 1, 2, 3, and it's 920. It's confirmed, and you were already making this very nice low, deviating your tab 1 right there, which when you see this with all the liquidity building up like this, you can look, hey, maybe I can short SUI, because Bitcoin as well had a very nice high here. And as you know, USDT and Bitcoin are inverse correlated. That's why you use that as confluences. You have your 1, you have your 2, you have your 3, you break structure, you go short. But SUI was the cleanest model, so you watch the cleanest. So this short deviation, you short, you target the range low. And that's only because this is a 2-tap. Yes, that's true. But you're trading a Wyckoff inside of a Wyckoff, so that makes it valid. Still following me? Okay, good. Because we're going over to SUI and we're watching for a short. And what do we see here? Did we see a deviation of the tab 2? No, not yet. We didn't deviate it. So there's your deviation. Does this Wyckoff inside of a Wyckoff still looks clean? No, it doesn't look clean, so you just delete it. Where's your break of structure gonna be right now? You have more than 2 candles going up right here. You have 2 candles going down right there. And you have more than 2 candles going up right there. So this is gonna be your structure break. When you break this structure, you're gonna enter your trade. And then you see the RR of the trade, because the RR, it was a stop loss of 0.34%. The RR would have been 2.3. So you could be halfway done of your weekly profits. And let's see if we're gonna break structure here. And there's your structure break. So you had a close below the break right there, but it was not the best close. You had a wick and not the best close right there, but then you're always watching your first move of your second candle, and that was going down. So your entry would have been right there, and stop goes above the high. You can connect the dots, boom, for the model 1, and there it is at 905. And we were going higher, and we were retesting that point. It doesn't matter because you already broke structure, so you were just going into this tiny supply in an even lower time frame right there. And when you go lower and you break structure again right there, you can trail your stop loss to this point, which you're risking a bit less. And USDT was confirmed right there at 920. So that's why you know your trade is definitely gonna work. And when you play out, we just flush down, and there should take profit. 2.5 RR, like incredibly clean, Let's look if it was in the volume profile as well. And when you see, you always draw your volume profile, by the way, from the beginning of the range till the point where you are. So you trade it at the break of structure, and then you can see the volume profile was high up in the range. All right. And this was empty space. That's why this flush down right here was so aggressive. You kind of bounced off that volume area low right there, made a bounce, and then boom, went lower. So that's incredible as well. You had that break inside of the volume profile, and you had a retest deviation of that volume area high right there. And what do we see here as well, if you notice, is that you're deviating that tab 2, and you kind of forming a model 1 going over into a model 2 right there on a lower time frame, which makes it even better. So when price goes up right here, don't panic. Please don't panic, because it's only gonna make the range cleaner. It just wants to retest this point and go lower. Like, it's even cleaner if it retests this point and go lower. If you didn't have an entry right here, where could you have entered as well? right there, no, not right there because you weaked it, but right here. Here would be a second entry bean with your stop loss above that. Then this would be your trade. So amazing trade. Hope you learned something, guys. Drop a like, drop a comment, and join the gulag. Maybe you have a chance to come in a circle as well. When you think you deserve you have deserved a spot in the circle already, let me know and let me know why. And see you on the next one. Ciao ciao.